The World Bank says the price control mechanism in Malaysia has caused lower supplies of food staples. This ultimately results in higher prices. Dr. Apurva Sanghi, its lead economist for macroeconomics, trade and investment, was speaking at the public launch of the World Bank's Malaysia Economic Monitor 2023. He believes the country's price control mechanism and allotment of agricultural subsidies have distorted the efficiency in the allocation of resources, and that there is a need for the government to conduct a review. Malaysia has the highest number of price controls in the region. According to the World Bank's findings, over half of the firms it surveyed that were affected by these price controls revealed that they actually cut their production by a fourth. This shrinking supply as a result of price controls is causing the prices of the affected goods to be jacked up. On subsidies, Apurva said the bulk of agricultural aid goes towards supporting the production of rice, but Malaysians spend more on non-rice products, so rice farmers, already squeezed by price controls, aren't incentivized to produce what consumers want. In its report, the World Bank also noted that between 2019 and 2021, the prevalence of moderate or severe food insecurity in Malaysia was at 15.4%. That's equivalent to 5 million people. It's that insufficient diversification in domestic production has led to growing imports in important categories of food products, especially meats and edible offal, maize and soybeans. This, it said, has adversely affected Malaysia's poor. The Ministry of Transport says the government intends to set up an Airport Development Fund or ADF to help finance the development of airports in the country. Transport Minister Anthony Loke said the ADF will be partly funded by airport taxes, the Passenger Service Charge or PSC, which is paid by departing passengers. He told a presser today that half of the PSC component that is taken into account in the calculation of the user fee that Malaysia Airports Holdings or MAHB pays to the government will be channeled into the ADF trust account. This percentage to be contributed to the ADF account will be reviewed every 3 years. The government and MAHB expect to ink the relevant operating agreements by next month. These deals will enable MAHB to choose between using either government allocations or its own funds through an identified investment recovery model mechanism with regards to funding airport development costs. Loke said MAHB will be able to jointly work with any private parties to develop the country's major airports, though any project will be subject to government approval. He also said that the Cabinet has agreed to rebrand KLIA and KLIA 2 to KLIA Terminal 1 and KLIA Terminal 2. This would improve their marketability, value and effectiveness and strengthen their regional competitive edge. Former M-Bank relationship manager Joanna Yu told the KL High Court that she believed Low Teck Joe's representation that he was Datuk Sri Najib Razak's advisor. This was because senior 1MDB executives, including former CEO Datuk Shahrul Azra Ibrahim Halmi, former Chief Investment Officer Nik Faisal Arif Kamil, and former Executive Director KC Tang, often referred to Jho Low as boss and the then Prime Minister as Big Boss in all meetings held between 1MDB and the bankers. Yu is the prosecution's 41st witness in the 1MDB tenor trial. She added that she had seen Jho Low at the 1MDB offices, though she had never seen Najib there. She also said she had no reason to doubt that Jho Low was not representing Najib, as the information related by the businessman on the accounts were oftentimes true. She said he would know when a cheque was written, when a card couldn't be used, or when there were incoming funds. Najib is on trial on 4 counts of abuse of power and 21 counts of money laundering involving 2.28 billion ringgit of 1MDB funds. The trial is slated to continue on February 27th, with former BSI banker Kevin Swampile taking the stand. Malaysia's unemployment fell to 599,600 persons in December 2022 from 600,900 persons in the previous month. The jobless rate remained steady at 3.6%. The Department of Statistics Malaysia (DOSM) said this is the first time the figure fell below 600,000 since March 2020. According to Chief Statistician Datuk Sri Dr. Muhammad Uzair Mahidin, in the final month of 2022, various festive celebrations along with a year-end school break caused a surge in traffic in malls and shopping outlets, signalling continuous improvement in Malaysia's economy. This holiday season led businesses to pick up, he noted, especially for consumption of goods and services. This was aided by the government's initiatives to increase job opportunities and strengthen the labour market. He noted that employment figures continued to grow, rising 0.1% to 16.13 million persons in December from 16.11 million persons in November. All states except for Kedah, Kelantan, Melaka and Putrajaya reported lower unemployment rates. Looking ahead, he said the country's labour market should remain positive and stable in the coming months. Kejuruteraan Asastra or KAB has acquired a 10% stake in Petronas gas subsidiary Regas Terminal Lahad Datu, which is responsible for a power plant project in Sabah. It will be the sole energy supplier to Petronas's nearshore floating liquefied natural gas facility that is completing in 2026. The share purchase agreement was inked between KAB Unit, KAB Energy Holdings and Patgas. The parties entered into the joint venture to co-own and undertake the 230 million ringgit power plant located at the Sipitang Oil and Gas Industrial Park, and also signed a shareholders agreement for KAB to assume the role of a technical partner in the joint venture. In January, KAB said it had secured a letter of award from Regas Terminal Lahad Datu for the engineering, procurement, construction and commissioning of the power plant. The plant, slated to be Sabah's first nearshore natural gas facility, would have a minimum capacity of 2 million tonnes per annum. KAB Managing Director Datuk Lai Keng On said the plant will serve as a model development as the group pursues more projects in Malaysia and Southeast Asia. At the close, KAB shares were trading unchanged at 37 sen, valuing the group at 668.96 million ringgit. Meanwhile, shares in Patgas dipped 0.71% to 16 ringgit 82 sen, valuing the group at 33.28 billion ringgit.